Hey everyone, Cotton Candy TA here. Welcome to Beginner's Course Part 5, Momentum and Volume. All right, before we start, I want to take a second to thank everybody. There's been an overwhelming amount of support come in from the community and for this channel. A lot of you are reaching out to me to let me know that this training has helped change your lives. It's helped make you a better trader. It's helped make you more money. For whatever reason, this is giving you value. You guys have been overwhelming in the support that you're giving me, and thank you for that from the bottom of my heart, because that's what helps this community grow, and that's what helps keep this thing going, is the support and love from the community and from everybody. Okay, if you guys haven't yet, take a second to like all the videos, subscribe, check out our Twitter account. I do post there quite often, giving updates, talking about different things, posting my TradeView charts and my TradeView account. That's where I am charting things as often as I can and putting up charts for people to follow and check it out. So that stuff's all in the description. You can find all the links there. Okay, so let's talk about momentum. What is momentum? All right, let's bring up the chart. Momentum is the cause and effect of something as it moves, right? It's what momentum is with anything, right? It's like when you throw a baseball and you throw a baseball here and it starts like this because it's faster at the start and it slows down and eventually it hits the ground, right? It's momentum. It's the same as momentum is in life. You know, it is the same as it is in trading. Momentum is momentum. Okay, and what is volume? Volume is the amount that a stock gets purchased and sold. So let's increase our volume bar here for a second. Oops, let's put our move tool on. Let's increase that. Let's zoom in a bit here. Okay, momentum, or not momentum, sorry. Volume is the amount of stock that gets moved in any one trade. It's the volume of price action. It's the amount of coin X that's being sold. If there's 1 million coin X here and only 500,000 here, this candle will be half the size of this one because it's half the amount of volume. So one thing I do want to mention about volume is this question gets asked a lot, so I just want to clarify it for people. The color of the candlesticks that I have here, I use light blue as positive and dark blue as negative, or as you guys see it on the default colors on TradingView, Binance, just the default colors on any chart would be green and red. So my green is my light blue and my red is my dark blue. So something I want to just briefly touch on is that it doesn't matter what amount of volume happens in that candle to dictate the color. This is simply just a metric that is, if the candle closes higher, so if it closes green, that volume bar is going to be green. If it closes underneath the opening price, it's going to be dark blue, or in your case, red. It doesn't matter if 1 million units were sold and only 2 were purchased. If that closing price off those 2 are positive in terms of price from when that candle opened, it's going to be that light blue color. It doesn't matter that 1 million was sold and only 2 were bought. Okay, so pretty important to know about volume. All right, how does momentum affect moves? Okay, momentum affects moves because momentum is the let's just turn off these moving averages here real quick. Okay, momentum affects moves because momentum is the way something moves. Like a stock or a coin or price cannot move, an action cannot happen unless you have momentum, right? Something will flatline unless it has momentum up or down. It's just going to kind of sit there. Nobody's going to buy, nobody's going to sell, and without momentum, you don't see price action swings, right? You don't see that stuff. So momentum is needed in the markets to kind of move the price. Okay, momentum affects moves as momentum is increasing, price is starting to, or the charts are starting to move with momentum, and momentum and volume kind of work together, and that's why we're doing this video as 2 units in one video. Okay, so how does momentum affect moves? Right, as momentum goes up, price goes up, right? It's kind of that swing, and what affects momentum. And before we get into what affects momentum, let's talk about volume for a second, because volume is what affects momentum. Okay, so volume is something we use to kind of see how a move comes to a completion or starts or ends, right? So if you take a look here, let's zoom in. Okay, if we take a look now, I want you guys to follow down here on this chart down here, the volume chart, which I'm going to increase right now. I want you guys to follow on the volume chart as this is going through the move here. And I'm going to go slow so we can kind of all go through it. There's something that happens in volume called volume climax or volume increasing. We'll call it, there's quite a few different terms for it, but we'll just call it volume increasing or volume climax. It isn't, common terms. As volume goes up, so does price, or as volume goes up, price goes down. It depends on momentum and where this move is. And I want to walk through this right here and kind of show you something. So if we look, right, kind of in this area here, right, we're going to be studying this, we're going to be studying this area here. So that's where I want your eyes, right, as well as up here, kind of go back and forth, right? If we look, right, you can see volume here is starting to increase, right? So volume is increasing, but it's pushing the price down, okay? As that price gets pushed down and volume starts to die off, that move then can start to move up, right? It's momentum. As volume climaxes and as volume goes up, it is further pushing that move. So the best way to understand this is that a move is not done until volume starts decreasing. If price is going up and volume is increasing, price is going to continue to go up. It is not going to decrease all of a sudden, okay? So if price is going up and volume is still moving up past its previous points, price will go up. And same thing for on the dump or going down. If volume is going down during price moving down, price is going to continue to move down, okay? So that's probably the simplest way to understand it. Now we're going to walk through this, okay? Now we were right here as price is coming, right? You can see volume is starting to increase here, which should push our price up, okay? The second that this volume dies off right here, it's going to then start to move in the other direction, right? It's the basic concept and principle of momentum. As something exhausts, as volume's exhausting, right, price is going to start going in the other direction because it's exhausted its upward motion. And we can see here that as we get to this candlestick here, right, and price goes up, look what happens immediately following. Price is going down because volume is going down. So we start to get into this swing of momentum, right? Price comes here, comes up, right? Volume pushes it up, price starts to go down, okay? As price is going down, look at what's happening here. Price is going down and volume is increasing. So what's going to happen? Naturally, like we said, price is going to move down based on volume increasing. And as that volume starts to die during the decrease, it will start to move back up. You see how volume stops climaxing right there and it starts to move down? Well, look what happens in the move, right? Our move starts to swing back up, right? And then volume dies and it goes down. And volume, it kind of sits in the spot where volume is, kind of going back and forth, right? But look what happens. As volume increases, our price goes up because that's what is being dictated by the move, right? Now, volume starts to die down. And this is just on a 15-minute chart, right? Volume dies down immediately after this. Well, what's going to happen? Just like we know what's going to happen. Volume is going to move down and it's going to continue to push down, right? And then what happens here? Let's take a look at this volume candle for a second, because this is an interesting one. Let's get rid of all these other lines for now. And let's kind of dissect this guy right here, because volume is increasing while price is going down. So let's see what's happening here. We're here. And then the next candle, we're still kind of, okay, so this is very important to notice. We're going to be looking at these 4 candles right here. Right, that span of 4 candles, right, kind of right here. This is 1, 2, 3, 4. Okay, that's what we're going to be looking at here because I want to further dissect this. Okay, price is moving down and volume is increasing. So volume is increasing, we're still moving down, right? So this is down here. We have volume decreasing now, which means we should move back up, which we do. It looks like we try to close up, but you'll notice that almost in these three candles, you have low volume, low volume. Well, look what happens next after that 3 candle, where you have the high point right there. So this is kind of like the swing high for volume, and then it starts to decrease. And then volume increases as this coin starts pushing down. So you can see that volume increases on this candle to push it down, and then volume starts to die. So what happens? Volume starts to die, and we have one volume candle, and that's it. Volume increases, price is going down, and kind of comes up here and does this thing where volume will now come to this point right here where volume takes a huge increase, and this volume, this dump will stop when volume starts to taper off, which is right here, right? Volume tapers off as it tries to move up, but it doesn't complete that move up because volume starts to increase downwards, right? So you can kind of see how volume plays this key role in where price is going, and how this is useful is live. So when you are in this move, we're going to step through a few moves here, and let's just kind of complete the end of this. When you are in a move, this can show you and tell you exactly what's going on in the moment. You can look at a volume candle and say, oh, I've seen the top, I think I should sell. Or, well, it looks like the bottom, volume's decreasing, and we're getting ready to start a swing up, right? Look at this. We see volume here. After this move down, it tries to move up, and volume just dies down. You see these 3 candles here? There's no volume. So volume increases as it moves down, right? Volume decreases, dictating the end of the move to see these 2 candles here, but then price rejects for some reason, and look at this massive volume spike into these next 2 candles. 1, 2, right there. Massive spike down. This candle right here, right? That's kind of a squirrely line. Try to keep a straight hand. Oh, damn it. That's okay. Just one little blip. Not so easy with a mouse. Okay. Well, it is easy, but maybe for me right now it's tough because it's pretty light. Okay, so we can see that volume decreases. Now, we hit a pretty interesting point here. We hit this level. This is important to know. Okay, and let's go back to this for one quick second. What affects momentum and volume and momentum in that S-curve, right? So actually, before we get into the next piece, let's just go over one thing real quick. That S-curve. That S-curve, it exists, right? It exists in all of life and across light and color. There's kind of this natural S-curve, and there's a scientific reason why it is. And you know, in Fibonacci sequence and the golden rule and the golden section, where you have that spiraling where you're adding the number here to this number, and that equals a larger number, and you add numbers together and it equals a spiral. This is all part of what created the S-curve in life. And the S-curve is this. It is momentum, right? It is what we see in charts, right? It can sometimes be average like that, or it can be really squirrely like this. It can kind of go crazy, or it can be really subtle where it does this thing, but it's that S-curve, right? And that S-curve happens in the charts all the time. So momentum and volume always lives and dies off this S-curve. You can see it here, it goes squirrely here, it goes up here, down here, up here, and this is like a really squirrely S-curve, and then it starts to taper off, right? It starts to kind of do this thing before it does that, and then it goes through this long haul here and up, and then it goes really, this is, this momentum idea of this S-curve, it lives in all charts, right? So understand that momentum moves with that S-curve. It is very important to know that these moves are happening along this S-curve, and volume is dictating momentum, right? So we have 2 more pretty important things to discuss here, okay? And the reason we discussed S-curve first is because it affects moving averages. The first thing we are going to discuss is a momentum offset. What is the resistance to momentum, right? What happens when momentum hits a point? Momentum will reverse. Well, I don't want to say reverse. Momentum faces resistance and starts to move in the other direction when you touch a level, right? Momentum starts to get offset by touching a level. You see how strong momentum is here? It gets offset by this level, right? And then it comes down and starts its S curve again, and it gets offset again by this level. Momentum has resistance, and the resistance to momentum is levels. It's not moving averages. That's something that people get confused with, and we are going to go over moving averages in a second here. But before we do that, we have to know that momentum gets offset by levels. You see, it gets offset by levels, right? Comes down here, does this S curve thing, falls down, gets offset by a level, comes up, gets offset by this level. Even though it's not touching it for whatever reason, that level is causing this price action right here, right? What happened? Okay, we lost our chart. Where were we? Okay, we were right there. Right, and then again, right here, momentum, it gets offset by a level. So it's kind of this idea that momentum is trying to break a level. Momentum is trying to create enough motion in a move to puncture through levels, right? Because these are the points of resistance that start to say, okay, momentum, slow down. This is, I'm in the way, you know, you're not going past me. And that's as simple as that. So what kind of starts and affects momentum? Momentum is caused by moving averages, okay? Moving averages are also levels. Now, kind of the industry standard for cryptocurrencies has become 7, 25, and 100-day moving averages. It's the format Binance uses. I myself personally like the 8-day moving average and the 30-day and the 100-day moving average, and I also use a 200. Now, it doesn't matter if you use EMA, SMA, MA. It's all universal to charts and stocks, and it's whatever you prefer. For me, I like MAs just because the basic moving average is, again, the platform that Binance has popularized through using it on all their charts. So I simply use MAs, whether you use EMAs or SMAs, it doesn't matter. So our yellow line here is an 8-day. Now 8-day or 7-day, it's going to be almost identical. Our teal line here, our blue line, is our 30-day, right? And our 100-day is kind of that pink color. So those are the levels, right? The levels of moving averages. Now, moving averages have to be looked at like the fire or the match that starts the fire, or whatever starts the ignition, whatever starts the mechanical entry or the mechanical movement. They call it mechanical because it's you know, it almost happens like clockwork, like a robot. These levels cross and something moves, right? So this is what starts momentum. So if we take this and we zoom in and we go closer into this move, we can see that this momentum is being caused by these moving averages, and moving averages act as levels. So when this crosses here, that's breaking a level. When this crosses here, that's breaking a level, which causes price to move up because you are gaining the support of the 25-day. Your 7-day is crossing, well, sorry, I should use my indicators here. The 8-day is crossing the 30, and the 30 is crossing the 100. So what happens is the stronger the cross, so when the 8-day crosses the 30, think of that as medium strength, and when the 30 crosses the 100, think of that as strong strength, right? Because that's the way these levels work. The bigger the time frame, the bigger the break, the bigger the move, right? The more momentum that's being created. So when you see something like this, right, where you've got 3 levels crossing, where you've got an 8-day crossing a 30-day, and then the 8-day crossing the 100, followed by the 30-day crossing the 100, you're going to get a big move in price. So that's what starts momentum, is these moving averages, right? So that's what starts momentum and affects it and starts to make it go kind of like the squirrely out of control thing where it does this. And it makes sense because think about it for a second. If we are right here in this move, right? Let's pretend like we're in the move. Let's back this chart up all the way to here. Say we are right here in this move, and if you look at the right side of the screen, and we can see that our 8-day moving average is about to cross over some of these other moving averages, it's going to create momentum because people are going to say, whoa, look, this looks like a great place to buy. And it is. It might be late entry. This is called mechanical trading, when you make trades based on levels crossing, and this creates interest, and this creates points where people are going to increase volume, therefore increasing momentum, right? So these moving averages, you see, as it starts to cross, it kind of tries to reject it. You know, people are selling, people have an intention to make the price go lower, but then people also have the intention to see this price go up because they're invested. So this is causing volume, right? And you can see it down here in this volume bar here. You can see volume increases as we get closer. As we get to that point where this is crossing, volume is increasing, right? And all these crosses, volume starts to increase. So this is what causes volume to increase. And you can see we come up and this level breaks. And this is causing moves in momentum. You see, when we've crossed over all scales here, whoops, when we've crossed over our 7-day has crossed over here, and our 25-day is also crossed, and we have found support on this 100-day moving average. You can see that the momentum that's created off the volume, you see how volume is increasing here? This whole way through, volume is increasing, right? You can see until it decreases, right? Volume is increasing still, again, right here. Right? You can see that these are what are causing momentum to make their moves, right? This moving average crossing of levels is what's causing this to move. So moving averages is what causes the S-curve to activate, I guess, if you want to put it in any way, the activation of the S-curve, or the momentum start and finish, right? Momentum starts and momentum increases as volume increases, and that gets triggered by these averages crossing. And then we can see momentum comes to resistance when it faces levels, right? And we can see that momentum comes to resistance when it touches these levels. So a really important thing to know is that what offsets momentum is levels. So momentum is going to kind of be that starting, you know, to talk about this one last time, momentum is going to be that starting of the move when these averages cross, and the level itself is going to be the offset of those levels. So momentum acts as the starting point to testing levels, and levels act as the major support and resistance lines, right? As we go through this move here, we can see that these moving average crosses and the momentum that it causes and the volume increases are all leading up to the point of it trying to test a level. So very important to know that momentum and these moving average crosses are kind of like the little cousin or the less powerful force to these levels. And this kind of proves it right here, because you know what, we can see something pretty interesting happen here. We can see that this level gets tested based off volume and momentum, and then we kind of go through this thing here and we test it again, but this time we're testing for the first time outside of the wedge. So if we actually look at this thing, and the second we come and we establish this here, this was a first touch outside of the wedge. So the next time we touch, we actually broke it. So that was a pretty good indication that if we have support on this move here, on this level, that we are going to move up, right? Because that is something that's important to realize, is that the momentum is causing you to go to to touch or to break levels. Not moving average levels, but real levels of support and resistance. You know, things like long-term wedges or things like weekly levels. And we can see that when that momentum allows us to break out of our trend, we actually test that level and take a pretty big move up, right? We take a pretty big move up here. And we're being supported by another level here, right? So we can actually see that momentum resistance is based off of levels. Momentum resistance up and down. Now, momentum resistance can come in either way, right? We see momentum resistance every time it touches this level, and it gives us momentum resistance, just like it supports us and gives us momentum resistance the other way, right? Let's get rid of this, get rid of this, get rid of this, right? And as we step through this move, we can see that these levels give momentum resistance. As momentum is falling down, this is giving resistance to it until we get to a point like this where we have started to touch this over and over and over and over and break out of something, right? Just like if we were to back here come down and move sideways, right? Just like when we were at the top and we move sideways out, if we were to come down and move sideways, we would eventually just keep moving sideways until we just naturally broke out, right? So that is important to know as well, kind of as the final catalyst to this video, is that these levels are what are acting as support and resistance for momentum and volume. So momentum and volume, the role they play, and you can continuously step through this. The momentum and volume play the role to test levels, and levels offset that momentum. So just to go over one last thing, we are going to look at a 4-hour chart here, and on this 4-hour chart we are going to kind of apply that idea of volume increasing and decreasing, right? And let's see how that looks like on a 4-hour chart if it still remains true, which it will, right? So we can see here that as price is going up and volume is still increasing, when volume decreases, we move down, right? And volume decreases, so this here on this volume move down, this would have to be higher. The next candlestick here would have to be higher for volume to keep increasing. That's the offset right there, because this is the high point of this down movement. So now that volume is lower, we know it's going to move down, right? Now that volume is lower, we know that that down move is done and we're going to move up. And then we have 3 candles up because volume is still increasing. Price is going to increase. And then when volume decreases, right, that's when price is going to move in the other direction. And now if price were to increase here while we're moving down, we would still move down. Okay, important to know. We would still be moving down if price was increasing, but we didn't. We actually started, and it's kind of an interesting thing to follow, because it's kind of like almost it reverses its expectation, right? Because you have to realize that this candle, the following candle, this one, volume has decreased. So we are going to reverse direction. Volume has now decreased again, which means we are going to reverse direction again. Volume is increasing while we are in that direction, right here, right? Volume is increasing, which is this candlestick. The second that volume goes down, we reverse that action. Volume is now going down again. We reverse that action and we move up again here. Moves up here, it moves up as well, and let's move up here. Now volume is decreasing, so price is going to move down. Now for this to continue moving down, volume would have to increase while it's moving down. And take a look. Volume is here and it's increasing while it's moving down. So now, as proof to this theory and this concept, you can see that if price was now up here, right, if price was now here, we would continue moving, we would continue move down. We would continue to move down. Why was that such a tongue twister? Well, that's okay. We would continue to move down, but because because volume has now moved down below our hard point, our price is going to move in the other direction, you see? So you guys can see how volume plays an intricate, I lost the chart, I backed it up too much. Volume plays an intricate role to how price moves, and this can show you in the moment, kind of maybe this is a good entry or a bad entry, or you're in a coin over here somewhere and you kind of top out and you see volume decreasing. It's like, okay, well, it's time to get out, right? So you can see how volume has an inherent effect on the move of something, and this is used in the moment to see when it's time to get in and get out, right? Time to get in when price has just dropped and volume is decreasing, it's time to get in. When price is going up and volume is decreasing, it's time to get out. Hope that makes sense. So yeah, volume plays an inherent role to your live trading, to what you're doing in the moment, in respect to whatever chart you're looking at. You're going to see volume has a direct impact on the way you trade. And this is pretty close to a science. There is going to be divergence in this. When the odd time you're going to see volume does the opposite of what it's supposed to versus what price just ended up doing, and that's going to happen sometimes. This isn't a 100% rule. It is more like a 90 or 95. I would say it's probably about a 95% rule. But you can have somebody who just decides to, sell 10 Bitcoin worth of ZIL or Ziliqua or however you pronounce this. I'm not 100% sure on the pronunciation of this. Maybe it's Ziliqua, maybe it's Ziliqua, maybe it's, I'm just going to call it ZIL. So for ZIL, maybe some guy decided to sell 10 Bitcoin and diverge the price in some way because he, you know, for whatever reason, maybe he didn't see something, or he just likes to trade big Bitcoin or wanted to get into something else, and something was pumping and he thought it was juicy entry. So maybe some guy sold 10 Bitcoin and it caused a divergence. So there is that factor. So, you know, although this is almost always true, there is that, you know, don't take it too literal. If you see one or two candles here that in your travels and searches, if it does something a little different than what you expected to do. Okay. All right, guys, I think that's it. I think that covers it all. What is momentum? What is volume? How does momentum affect moves? What affects momentum and volume, and how they live together with the S-curve, and momentum resistance. That's it. Beginner's course part 5 done. We are now officially halfway through beginner's course. Next lessons 6 to 10 are coming soon. I hope you guys enjoyed this, and take care.